Last year was already one of the weaker years Canadian real estate has seen in a long time. National home sales totaled 470,000 in 2025, which was almost 2% below 2024. And the Canadian Real Estate Association noted that 2026 would mark a fourth straight year with sales falling to crack the 500,000 mark.
Yikes. Yeah. Instead of a clean rebound like many were hoping for, the new year had a colder start. Dana, we've made this joke before, and I'm going to make it again. It wasn't just the weather, even though this was a long, grueling winter. January activity was 16.2% below just year ago levels, and February sales in Canada were down over 8% from February 2025. So far, 2026 looks worse. And if you want to go back to a market where we had a comparably slow February data, you've got to go all the way back to the global financial crisis of 2009 or the 1990s, which we're going to touch on. But before that, welcome back to the Canadian Real Estate Podcast. Today, we're chatting Korea stats. And you go to these events, and Dan, you and I talk to a lot of people that are real estate professionals or, high caliber investors, or even beginner investors, day in and day out. And it's so funny to hear the different sentiments. Sentiment from some people is optimistic, and they're looking at this time as a prime opportunity to make some moves, whatever those may be. And then, of course, I think the louder majority is not happy overall. That's not the case at the events for the most part.
Well, I mean, it's like investors are, I think, a little bit like contrarian because, that original Buffett quote, be greedy when others are fearful and fearful when others are greedy. Like, I think a lot of us err on the side of like when we see everybody else being like depressed and wanting to call it quits on the market. That's when we're like, okay, maybe this is like peak, capitulation, and this is actually my time to jump in. And this is one of those things that really showed up in the data, and this is what makes February's housing data so striking. On the surface, you've got a couple of different things happening. Affordability is getting better, prices are coming down, interest rates are lower. National Bank, they basically just showed that in their housing affordability monitor, which we'll cover on the show, showed that this, because prices fell and more favorable rates, the housing affordability has actually been improving on the longest streak ever, I think. And Statistics
Canada.
Canada.
That's not confusing information,
right?
I don't know what it is, right?
Well, it was just so bad.
Is that a good thing or a bad thing or both?
Yeah. And wages are up year over year. So, the pure math of end users, like homeowners buying houses, has improved somewhat. And there's a lot of new news coming out that, development, HST,
a lot of
development charges,
et cetera.
Yeah. There's a lot of stimulus going into the market. But still, I mean, there's not a lot of stuff going on.
It's not marketing right now.
February this year was worse than last year, and last year was very bad.
Yeah, and it's so funny, you just tell me that wages are increasing marginally. Okay, well, good. Like, that's what they should be. That's what they should be doing. But then at the same time, we're getting jobs reports with like 84,000 jobs gone, So, I mean, look, and this all affects housing, of course, at the end of the day, because the housing market just also doesn't just run on affordability math alone, right? I mean, we're talking about sentiment here that goes back to the kind of the word of the episode. Right now, confidence is not there. We're kind of getting hit from every direction. Trade war still, and now, of course, the introduction of another unfortunate real war that have already put sentiment in general, economic sentiment in the housing market kind of down the tube. RBC arguing that tariff anxiety has actually pushed many buyers into, or back into, I should say, or has made them stay there in that kind of wait and see mode, right? Those proverbial sidelines that we've been talking about for years now that are still full. And on top of that, there's, of course, this oil crisis that's being generated by the war in the Middle East, which Reuters now has report is going to be driving, of course, oil prices higher, and that is going to have a direct correlation with bond yields. This could revive inflation fears, and who knows, even put rate cuts back on the table. Like, it's kind of getting crazy again.
So crazy. Yeah, it is crazy. And then you have like the labor market, right? So I mentioned that wages were growing, but it doesn't really matter if wages are growing if unemployment rate's rising. Canada lost 84,000 jobs in February, and the unemployment rate rose to almost 7%, 6.7%. And okay, that was according to this recent Statistics Canada release. This obviously matters, and I think it matters in the context of Carney and Doug Ford really ramping up stimulus for the construction space, because he's starting to realize the real consequences that we've been talking about for 2 years. We've always been worried about construction labor, and it sounds like policymakers are finally also worried about that.
If only they listened to the show a couple of years ago, eh?
Yeah. And I think like the real estate associations and I don't know, whoever's observing this stuff, they like to blame external factors like the war and trade war and whatever. But I think that it's not just that. Like there's internal factors as well. Our economy hasn't really been that strong. People don't make the biggest purchase of their lives when they're worried about layoffs, shrinking commissions, weaker bonuses, getting replaced by AI, whether or not their employer will still be hiring in 6 months. Rising mortgage delinquencies add to that caution. CMHC has already said that mortgage arrears have been increasing nationally, with Toronto and Vancouver facing the biggest projected rise in delinquency risk as we're getting through that renewal wall. We get higher payments, softer prices, weaker resale liquidity, and a weaker labor market. Obviously, all of these things collide there. We're still early, and they still have to peak. At least labor, your unemployment rate typically peaks before your mortgage delinquency rate.
Yeah, I mean, it's funny. It's hard to, if you want to be extremely generous and maybe a bit charitable, you can say, okay, well, yeah, all that stuff matters, but, I guess the market's slow and the economy's not great because it's been a long, dark winter. Korea's January release literally argued that the early year slump was probably more about historic winter storms than a downshift in demand. I think we're long past that. Canadians have been dealing with winter for a long time. We haven't been dealing with all this other stuff. And listen, I like to stay indoors as well on a snowy, cold day. I'm not out trying to buy a house, but I think there's several other factors. And by February, it's hard. You can't just pin it on the snow alone. I mean, it's not bad anymore. And this looks a lot less like a weather event and more like a market just kind of stuck between improving affordability and like just increasingly dramatic worsening uncertainty on both a national and international level.
Yeah, 100%. Yeah, so as a result of all of that, the housing market remained subdued in February, with national activity still searching for some sort of catalyst to give it growth. I guess we'll see in maybe March data. We won't see it, but April, May data, whether or not all of this stimulus coming from the government is actually going to do anything. Although apparently on the GTA readings, which should be out in a couple of days, it does look like March is a little bit stronger than last year so far. Yeah. So home sales dipped month over month, which is really rare, by the way. Like to have fewer sales in February than January is like super rare. I think it's happened once or twice before. Actual sales came in over 8% below February 2025. New listings also fell, which is, again, if you're a seller who's hoping that prices aren't going to go down too quickly, new listings fell but 4% from January, which left the sales to new listings ratio, which is a measure of how quickly properties are selling, at about 47.6%, which is sort of within that balanced market territory, but below the long-term average of 54.8%.
Yeah, I mean, what those numbers are really saying is that it's kind of, none of those are headline makers or breakers really, but it's really kind of the story that's not being told, that the market just remains soft nationally for very different reasons depending on where you look, right? As we've said numerous times, you can't paint all Canadian markets with one broad stroke. Canada had about 151,000 properties listed for sale at the end of February. That's up 3.7% from a year earlier, but still 12.3% below the long-term average for this time of year. Months of inventory sat at about 5 nationally, unchanged from January and roughly in line with historical norms. Okay, so that's not bad, I guess. On paper, it suggests balance, but in practice, it suggests fragmentation. Korea itself even noted that the national average masks wide regional difference, with no province sitting exactly at that level. So classic story here. We're seeing spikes, peaks and valleys across the country. And it's just hard to tell.
Yeah, and I think we'll get into sort of what markets are doing well. It's usually what you guess. Ontario and BC not doing well. But prices obviously also reflect this unevenness and sort of one of the root causes of it, right? Like where house prices are cheaper and lower, people can afford to buy and they're buying. National composite MLS fell 60 basis points, was down about 4.8% year over year. But the actual national average price was about 660,000, which was about unchanged from a year ago, just 20 basis points down. If you adjust that for inflation, it would be a pretty big drop. But the gap between benchmark and average price matters because the benchmark tells us that your underlying valuations are still under pressure for specific unit types, particularly in parts of Ontario and BC, even if the national average looks relatively stable on the surface. And we are still seeing prices falling in Ontario and BC. And, Ontario, it seems to be the biggest drag on that. I think this is why we had Carney and Ford really starting to push policy-wide to stimulate construction there, because the market's just so slow. Like, it's actually crazy how slow it is here, right? Like,
noticeably, like you can feel it. Like all the posts on LinkedIn are about it. It's people have really had just enough at this point, and I'm hoping it's not too little, too late. I don't think it is, but it's going to have to be pretty big action to get things fired back up a little bit.
Yeah. It doesn't really, like, confidence matters, but also, like, people are broke in Ontario. Like,
that's what
our unemployment rate's high. Everybody's super indebted. People, there's a lot of mortgage delinquencies. Like, it doesn't matter household debt to income, but also house price to income ratio. Like, it doesn't really matter. Yeah, you can probably help get sentiment back, but it also is very difficult for that to matter if like people can't just generally afford it. So Ontario in general, like, average price was 800,000, down about 5% year over year. Months of inventory rose to 5.3. GTA benchmark price was down almost 8% year over year, with notable weakness across many surrounding Ontario markets as well. So relatively just a bad story across the board for Ontario.
Yeah, and then over to British Columbia, that is unfortunately showing a similar dynamic, slightly different depending on the market, but province-wide residential sales were down 3% year over year. Residential sales fell almost 10% from February. In the Fraser Valley, the average residential price was down almost 10%, while Greater Vancouver prices were down just over 1.5%. Alberta, by contrast, continues to look comparatively resilient. That has seemed to be the story for Alberta for a long time, especially versus Ontario and BC. Residential prices there were up almost 2.5% year over year, with inventory still tight at just about 3.5 months. Moving over to Saskatchewan and much of Atlantic Canada, who also continue to post firmer price growth in Central Canada, even if sales volume softened in some of those places. So same story.